everyone, very good evening. It's 5 p.m. on the clock, which means it's time to kickstart a Rise with India Prime Time with your one-stop destination for every money matter that you need to know about, and that is the Money Show. Now, as we approach the months of December and January as it's vacation time for a lot of people abroad, I'm sure a lot of NRI relatives and friends of yours want to make their way home. And this is what, or rather that is what this show is dedicated to: NRI financial planning, NRI tax planning. Where can an NRI park his money? Are money-making opportunities only limited to those people living in India? And also, what's the tax treatment for any income that an NRI earns, especially if it is earned in India? That's what we will be discussing on the show. And of course, apart from NRIs, we have something for all Indians out there, and that is yet another triple lens camera launched, the Vivo U20. We are going to pit it against a couple of other phones, find out if it is worth the buck, track the latest launches as well in the tech world, which one is actually worth your money. Like I said, a lot of your NRI relatives, a lot of your NRI friends may be making their way back home to India for a brief period, for a short holiday. And that's when they should revisit their financials. What are the documents they must have, whether it's an Aadhaar card, a PAN card, where can they park their money? Because do remember, an NRI is not allowed to have a PPF account, but at the same time, they can very much invest in mutual funds. That's what we will be discussing on the very first edition of the Money Show. And for that, let me bring on board Mr. Pankaj Matpal. He's the MD of Optima Money Managers. Mr. Matpal, thank you so much for joining us on the Money Show. To start off with, I know that every investment avenue is not open for NRI. So which are the investment options available for them?
See, NRIs can invest in almost all schemes except only the post office scheme, or we say small saving schemes like PPF, NSC, time deposit in post office, or monthly income scheme, or even sovereign gold bond. These schemes NRIs are not eligible to invest in. Otherwise, like mutual funds, bonds, debenture, fixed deposit, real estate, these everything means are available for NRIs as well.
Tell me that, for an NRI, it's very difficult to track every mutual fund movement, every equity share movement because of simple logistics like timing. So how would you advise they go about that?
See, for any investor, whether NRI or resident Indian, first thing is that set your financial goal. And once you set your financial goal, based on that, you should invest in different asset classes. And within asset class also, to make it simpler, like you said, it is difficult to track your portfolio. So if you invest through PMS, you invest through mutual funds, you invest in fixed deposit, that becomes easier. Second thing, like in equity market also, NRIs can invest in equity, but unlike the resident Indian, like they can trade, they can do intraday trading also, but NRIs are not allowed to do intraday trading in equity market. So they have to invest for a long term only, and which is we always recommend even to invest in equity for long term. So NRIs can invest, but a little bit method is different. So simple, like in demat form only, they will invest in equity shares. So my suggestion, first you set your financial goals, and based on that you invest. Now when we say asset allocation, one thing is a fixed deposit. Like for NRIs, if they invest through their NRE account, first thing I'll tell to the viewers that NRIs can have two accounts in India, two bank accounts. One is NRE and another one is NRO. NRE is a non-resident external account where the money means the Indian earning cannot be deposited in that account. Only that what you earn outside, that is invested, that is parked in that account, and that is fully repatriable. And NRO account is non-resident ordinary account, which is non-repatriable, though you can take that money, but you have to give declaration in form 15 CA and CB to a certain limit. So if you have some income in India, like you have a house where you're getting you have given on rent, and rent is coming from that house, or some other income is coming from India, that you will invest in your NRO account. But if you have any money from your external sources, the country where you are living right now, you earn there, that you can deposit in NRE account. So from NRE account, if you make FDs, which are known as NRE deposits, will be tax free. Though returns are not very attractive, these are as good as other FDs in India, but returns are tax free for the NRIs. So first thing I will suggest that they should have some exposure to these NRE fixed deposit, but because rate of interest is not very attractive, then mutual fund route is the best thing, because mutual fund gives you opportunity to invest in diversified portfolio of equity, debt, hybrid. In equity also large cap, mid cap, everything is available. So my suggestion that first set your goals, then based on that make a proper asset allocation. After you invest at 10-15% of your wealth in fixed deposit, NRE deposit, then invest in mutual funds, and in mutual funds you should have proper asset allocation. If you are investing for long term, higher exposure must be in equity oriented mutual funds, and go for SIP route, go for lump sum. Only thing you have to understand, in mutual fund when resident Indians they invest, there is no TDS, but for NRIs TDS is applicable. So that is why if you are opting for suppose STP, systematic transfer plan, that TDS may be applicable. If you are redeeming your funds in short term, TDS will be applicable. So you should take care of that as well. You should understand that.
Mr. Mathpal, there are a lot of Indian fund houses that sometimes are a bit reluctant to accept NRI money because there's something called as the FATCA, or the Foreign Account Tax Compliance Act, and there are some very onerous provisions over there. So that brings us to documentation. I mean, almost every Indian and obviously every NRI as well has to ensure they do the due KYC. So in terms of documentation, what would you recommend an NRI should definitely have so as to make his or her investment process in India easy?
See, first thing I tell you regarding that Foreign Account Tax Compliance Act, that is applicable especially for the investor, means everybody has to declare that, but what we are talking about, that many AMCs they are not accepting investment from the NRIs, that is only applicable for the US and Canada citizens. So any NRI who is living in US or Canada, investment is not accepted by many mutual fund houses from them. Those selected mutual fund companies, only selected AMCs only accept application from the investors from US and Canada. Otherwise, rest of the world, anywhere NRIs are there, they can invest in any mutual funds in India. There is no restriction on them. Now coming to this documentation, see today KYC is must for investing in any instrument, whether it's a mutual fund or any other scheme. So for this, your PAN card is mandatory. After a certain limit, like 50,000 is the limit in mutual fund. If you invest more than that, then your PAN card is must. So you have to have PAN card for this. Second thing, as an NRI, when you invest, you have to give both the address proof. One is India, your local address here, means your resident, your Indian address, as well as address of the country where you are living right now. So two address proof. Most of the time what happens, because you are we are discussing more about the NRIs who are visiting India this time, and my experience is that most of the time they miss to carry their address proof of that country. That is why we always say when you go back, then please send it from there and then their investment will start. So this time my suggestion that whenever they are coming to India, passport is there already with them. So Indian address is mentioned on that, but one address proof of that country, their TIN, their tax information network number, that should be with available with them, and or social security number should be, or that card should be available, as well as their address of that country, any proof, whether the bank statement of the bank where they're banking in that country, or driving license, maybe if it is issued in that country, it is available. So that will have address of that country. So their residence address of the country where they are presently living, that is required, and as well as address proof of India. These two things are important. Second thing, as they are NRI, so they have to establish this that they are NRI. So their passport copy along with the pages where the immigration stamp is put, those are required for the KYC purpose. Their visa and plus those pages where the immigration stamp is put. So they should carry their passport when they are coming for the investment to bank or the advisor, they should carry that, and plus, as I said, address plus photographs. These are required for any investment. So these are the basic requirements any investor will have to have, especially this what I discussed about the address proof of the country where they are living. That is the additional one, especially applicable for NRIs. FATCA, etc., what we are discussing, that Foreign Account Tax Compliance Act, that is a form basically they have to fill, so that can be done on the spot. No specific thing required as such, but as far documents are concerned, these are the documents they must carry with them.
Okay. Now, Mr. Mathpal, not just NRIs, but to be NRIs as well. I mean, if the data given by countries like US and Canada are to be believed, there are flocks of Indians applying for the Canadian PR and the US green card, H1B, so on and so forth. So for any of our viewers watching who want to, go abroad, who want to sort of start their life abroad, what would you recommend they do in terms of financial steps back home?
Definitely, first thing, if you want to become NRI, means you want to migrate to other country or want to go temporary also for long term. First thing is that your income tax, because most of time I've seen that people do not file that ITR only here, and that time they realize that they have never got notice. But once you are in India, you can manage it. But once you are outside, it becomes difficult. So please, first thing, you file your ITR. It should be very, very clear that till the last financial year, everything should be clear. So ITR should be filed. Second thing, your any dues of your outstanding dues, like a credit card dues or outstanding bill payment, should be clear. There should not be any outstanding on that. You must see this. Even in your CIBIL score also, I'll tell you sometime your CIBIL report, you have paid everything, but there may be some errors. So my suggestion that download your CIBIL report before you leave the country. If you're finding any error in that, if any outstanding is showing that, try to get it rectified. Talk to your bank, they will get it done, but you make sure that nothing is reported wrongly. That is sometimes happens. And your outstanding, whether it's a credit card, whether it's a loan if you're paying from there is okay. If any your banks are linked, means your bills are linked to your banks, that also makes sure that whether you are having money in that bank or no. Most of time what happens that your insurance policies premium is linked to your bank account, so it goes from that. But maybe that if you leave India, you are not operating that bank account, money may not be sufficient in that. So in that case, you dealing it so that whenever the bill is due, you can pay it, instead that it is linked to your bank account. So take care of these things. Otherwise, unnecessary, something is not paid on time, or you are under impression that it will be debited from your bank and do not have sufficient money. So take care of these all things. And second thing, do update your contact details, because most of the time when you leave India, your mobile number becomes inactive, and whatever the message, whatever alert comes on the number, you will not get it. So that is why make sure that anybody in your home who can have access to this, you update their number, or have the updated number in the records of banks or any other investment. Okay. That is very important.
Okay, all right. Basically, just ensure that the bank will not have any problem in communicating with you. Okay, so folks, you have any NRI relatives, friends, or if you yourself are an NRI, make sure you bookmark this link, because it's literally a checklist of everything that you need to do. But on that note, we want to give you as well, our viewers, a chance to ask any questions that you may be having, especially if you're an NRI. To all our folks watching in the Middle East, some of them in US, if they've woken up, or in Australia, New Zealand, if you're still awake, do call in right now, 24990300, or you can email us on the Money Show at etnow.tv. Mr. Mathpal, with that, we'd like to thank you for joining in and very patiently answering all those viewer questions and queries. Quick break right here on the show. Like I said, when we return, NRIs continue staying tuned because we will be telling you how to manage your taxation effectively and what are the incomes that you'll actually have to pay tax on in India. Welcome back. You're watching The Money Show on ET Now, where we are discussing a show dedicated to NRIs. Many of them may be making their way to India. They may be having incomplete documentation, are interested in investing in the India story. That's what we discussed with Pankaj Matpal. And now, of course, the topic of taxation. What do NRIs have to pay tax on? What do they don't need to pay tax on? Which are the incomes eligible for, exemption from taxation? That's what we will be discussing. Also, if you are sending money from abroad to India for your relatives, for your parents, is it subject to tax? All of that will be answered by Karan Batra, founder and CEO of the CharteredClub.com. Karan, thank you so much for joining us on The Money Show. Firstly, when we say NRI, it usually just for us as a layperson means somebody who's just living abroad. However, the Indian Income Tax Department has said, wait, to be classified as an NRI, there are certain conditions that you have to fulfill. So just going abroad for a day and staying there does not maybe mean that you are an NRI. So what exactly are those conditions, Karan, to set the context?
Hi Mubina, good evening. So we first have to determine what was the purpose why the person left India. Did he leave India for the purpose of employment, or he left India for some other purpose, say for example vacation or tourism or maybe medical treatment? So if he's left India for the purpose of employment, there's only one condition that we have to see, that was he in India for 182 days or less, or he was outside India. So if he's in India for less than 182 days and he left India for the purpose of employment, he would be classified as a NRI for that financial year. Whereas if somebody left India for purpose other than employment, then there are two conditions that are to be satisfied. The first condition is that he should be in India for less than 182 days. And the second condition is he should be in India for less than 60 days in that financial year and less than 365 days in the past 4 financial years. So both the conditions are to be satisfied. Whereas if he left India for the purpose of employment, there was only one condition that was to be satisfied. Another thing which is to be noted is that the residential status is for one whole financial year, and every year it changes. So every year we determine the residential status, and on that basis the returns are filed.
This is very important. Just because you have been determined as an NRI for 1 year, it does not mean that every year and for life you will be an NRI. If you've come back to India, stayed for beyond that number of days, you may still be classified as an Indian resident as opposed to an NRI. Okay, so Karan, now that a person's residential status has been determined, that he is an NRI, what are the incomes on which he will have to pay tax in India, and what are the ones which are exempt? Some basic examples, if you could start off with that.
See, in case of a resident Indian, what happens is the entire global income is taxed. Whereas in case of an NRI, it is only the Indian income that is to be taxed. And that is the purpose why we determine whether a person is a non-resident or a resident. I'll take an example. I am a resident Indian. Now, if I have some shares which are listed on the NASDAQ, the gains that I earn from those shares, I will have to pay tax on that in India. Whereas if that's in the case of a non-resident, if he has shares which are listed on the NASDAQ, those shares are outside India. And so he does not have to pay tax on those income in India. So NRI only pays taxes on his Indian income, whereas a resident pays taxes on his entire global income.
Okay, so let's say, Karan, what if I'm living abroad and I have a house over here that's given on rent? Will I have to pay taxation on that?
Yes, the house is based in India. Okay. It is located in India. So if I'm earning some rental income on that, or when I sell that asset and I earn some gains, so the asset is located in India, and therefore it would be taxed in India in case of an NRI as well.
I have a business in India, shares like you mentioned, listed in India, and if I sold that, then accordingly I think an NRI will be subject to taxation. Okay, Karan, now just like how residential Indians have certain exemptions that we are allowed to enjoy, for example ATC, etc. What are the most common exemptions available to an NRI? I mean, can they as well make some investments that will help on them being able to manage their taxes or save their taxes efficiently?
Yes, NRIs are also eligible for tax exemptions.
Okay.
So they can take the benefit of Section 80C by investing in life insurance or mutual funds or ELSS or ULIPs. They can also take the benefit of Section 80D, that is health insurance. And they can also take the benefit of Section 24, where the interest paid on house property or interest paid on loan taken for house property can be claimed as a deduction. And moreover, they can also take the benefit of Section 54, Section 54EC and Section 54F. These sections basically say that if the NRI sells an asset in India and buys a residential house property or bonds, then his capital gains income would also be exempt. So these are the most common deductions which NRIs can claim.
All right. Okay. Now, Karan, I also want to talk to you about the most common question that we are often asked is that if I send money from abroad to India for my relatives for whatever purpose, for their personal use or anything, what is the tax treatment for that? I mean, will the relative who's receiving the money have to pay any taxation?
See, if a person gifts money to his blood relatives, then there is no tax. That is a gift. And there is no maximum limit on that. Whether I'm sending 1 rupee or 1 crore rupees or 10 crore rupees, there is no limit on that. So if a person is receiving gift and the relation is that of a relative, as specified in the Income Tax Act, then there is no tax that is to be paid on this amount.
Now I understand that as an NRI, there are certain investments like the NRE or the fixed deposit account for the NRI that I can make. What's the tax treatment on those? Because those are specially for NRIs. Do I have to pay taxation on those as well, on the interest I earn on those accounts?
See, to encourage NRIs to invest money in India or to park their funds in India, the government says that they've made this tax exempt so as to encourage. So the interest earned on the NRE account and the FCNR accounts are tax exempt. And there is no maximum limit, irrespective of the interest earned, that is tax free. Moreover, in some cases, sometimes government issues certain bonds as well. In those cases as well, the interest earned is tax exempt.
Okay. You know, Karan, there's something called as a double taxation agreement that two countries enter into. India as well has a DTA that it has entered into with various countries. At what points should an individual actually refer and check that, oh, okay, does my country have a DTA? When does such a situation arise? And, to put in examples, look, Indians mostly are residing either in the United States, in the United Kingdom, Australia, Canada. These are where Indians mostly are residing. So, what is the DTA status with those countries for India?
I'll first explain you what DTA is, and I'll explain you with the help of an example. Say, for example, a person is earning some rent from a house property, and that property is located in India. So he'll have to pay rent, the tax on rent in India. Moreover, he'll have to pay the tax on rent earned in the US or Australia or Canada or whichever country we are referring to. And the same is the case with capital gains as well. Now the point comes that first the NRI pays taxes in India, and then he pays taxes in US or Canada. So this tantamounts to double taxation. So in such cases, what happens is that two governments have tax treaties that if a person has paid taxes in one country, he can claim a relief in the other country. So say, for example, I've paid 20 rupees, the NRI has paid 20 rupees of taxes in India, and his tax liability in the US was, say, 30 rupees. So in the US, he'll go and say that, see, my tax liability is 30 rupees, out of which I've paid 20 rupees to the Indian government, and only the balance 10 rupees is to be paid. This is the concept of double taxation. Now, when it is to be checked, so when the person is filing his income tax returns, he sees that, okay, he is paying taxes in India. That is when he should check whether the country in which he is based, does that have a double taxation avoidance agreement with India or not?
Okay. By the way, NRIs also, very recently there was an announcement that you can in fact invest even in a national pension scheme as well. All of these are tax saving options for any income that you have in India. Now the NPS route as well has opened up for NRIs. So that, I suppose, is yet another investment avenue that's opened up. But with that, I suppose we'll wrap it up then on this edition of our Money Show NRI special. Karan, thank you so much for joining us and giving us an A to Z of taxation for NRIs. And folks, coming up next on our Spend with TMS segment, we are going to be talking about the latest entrant in the latest fad of triple rear cameras. That's the Vivo U20. It will go on sale on the 28th of November. We're going to compare it with two other phones that will have gone on sale today. Are they worth your buck? That's what we'll be deciding on our Spend with TMS segment on the other side.